diving into a value investing comparison between automotive giants Ford and GM. They both have a rich history. They have iconic brands. But of course, the question is, which is a better company? So we're going to dig into that today. Again, this is a fundamental analysis, not really technical analysis. So we're not going to spend any time looking at charts or trying to figure out patterns in trading or looking at any of that. If that's your thing, more power to you. Definitely give me some feedback in the comments on how you feel like these are performing relative to the fundamental analysis we're going to dig into. But for now, let's dive in. So again, a lot of these figures are going to be from Yahoo Finance. I find that's the easiest platform to use. It's free, it's simple, it's got everything you need right there in one place, and you can't really beat that. So we're going to start diving in. So I'm going to scroll down here a little bit. So there on the left side, I've got kind of the different things we're going to be considering, different factors that are going to play into what we take away from these companies. Obviously, Ford's in the middle column and GM's on the right column. I assume you can read if you're looking at investing and doing fundamental analysis. But hey, to each their own. So right now their current prices are $12.66 and $34.27. Today is June 5th in 2023, in case anybody's watching this much later on. Some of this stuff may still be applicable. I'm definitely going to be interested to look back on some of these videos and figure out, kind of look at, okay, how did it play out? These are going to be kind of cool time capsules for me to look back on and see, man, did any of that actually pan out, or was it all fluff? So that, I think, will give me personally a better track record for my own investing purposes to kind of decide what was really useful, what wasn't useful. And so we're going to move forward. We've got our current price. GM obviously has a little bit larger share price, less shares outstanding, so it's just less diluted. I like to look at their ISS governance scores. I find these kind of valuable. I want to invest in companies that are have a good, strong culture, that are meeting strong audit requirements, that their board is acting well and is competent, that, as a shareholder, if I'm going to invest in a company, I want to make sure that I'm being respected for my point of view and my thoughts. And then as well, I don't want to invest in companies where they're just grossly overpaying their executives. I believe they need to be paid well. They're making huge decisions for millions and millions of people, and their actions affect, the economies of whole nations. So obviously they should be probably paid well, but, not grossly overpaid. So if we look through here, they both have 9s in audit scores. That's not great. I know that accounting in the automotive industry is a little strange, the way that you have to factor in inventory and those kinds of things. So don't love that. The board rating for GM is a lot lower. It's at a 3. The shareholder rights is at a 10 for Ford. So the higher number, the worse it is. But it's at a 4 for GM. So that makes me feel a little better if I'm going to buy a stock. I'd rather buy the stock that has a 4 rather than a 10. And then on compensation, they're both at 7s. So not as bad as it could be, but could be better. We can look at their price and earnings. Here we've got some simple ratios to look at. The forward price earnings will be a little higher for Ford, 7.26 versus 4.88 for GM. The trailing 12 months, where has it actually been, is 5.19 for Ford, 5.10 for GM. GM's going to be a little more stable there, so that's something I want to look at. Looks like it'll trade for a little bit more of a discount moving forward. And again, those are just expectations. Past history doesn't determine future results, but we do our best to make our best estimates and guesses here. We're going to look at the PEG ratio, price earnings to growth. We want less than a 1, so Ford's kind of got the edge here, 0.77, whereas GM's at 1.34. Now, it's not a deal breaker, right? As long as the price earnings are in line with our growth price to book is 1.13 for Ford, and GM has the edge at 0.66. That's a big value that I like to look at is the price to book because I want it less than, definitely 2.5. I like it less than 1. So both of them are in range for a value investor. Their book value per share, 10.59 versus 49.91. So GM, again, we scroll back up here, 34.19. Again, their tangible book value per share is higher than the share price. So, I mean, if they liquidate it tomorrow, theoretically, you're going to get your money back as an investor. So that makes me feel warm and cozy. Again, if GM goes down tomorrow, then it will feel like 2008 all over again. The price per sales, both at 0.3, that's a healthy place to be at. Just a few years ago, we had some tech companies that were trading at 100 price per share. So like insane valuations. Luckily, a lot of that air has been sucked out of that unsustainable trading patterns. We're going to go into our margins and returns. These factors look at management effectiveness. I want to see good, strong numbers here. And profit margin-wise, GM's doing a little better. Operating margin, GM's doing a little better. Return on assets, GM's doing a little better. Return on equity, doing a lot better. So GM's really got the edge here on running a lean business model. Something I'll note here later on is that, Ford's undergoing some restructuring here under their CEO, Chris Farley. I hope that's the right name. If it's not, then that's just the actor. But GM started doing these cost cuts, I believe, in 2018. So they're ahead of the game as far as getting their business model more lean. They also had quite a bit of debt, and as most auto manufacturers do. And so definitely good to be ahead of the curve. Their past 5-year growth was roughly the same. Ford did a little better at 9.81%. I liked Ford the last couple years. I got pretty good return. I think I bought in at around $7 or $9 a share, and so up at 13, I feel pretty good. But they both performed well. Now this again is just Yahoo Finance. Whoever the analysts are, and it doesn't specify, the expected next 5 years of growth is a negative 7.9% for Ford, whereas it's 15.7% for GM. Again, I don't put too much stock into future performance and expectations because they rarely, if ever, pan out. But it's good to see where people's sentiment is at. Again, we're not doing technical analysis, but there is something qualitative to expectations. As far as operating free cash flow, they're both in a good position, whereas under levered free cash flow, Ford's definitely got the leg up. GM's negative levered free cash flow does give me some concerns. That means they don't necessarily have enough free cash flow to cover their debt obligations. That would be a red flag for me as a value investor. So I want to make sure, to dig into those financials and figure out, okay, what's going on? Have they just been making some big debt payments, in which case totally acceptable to cut into that cash flow? If they're just struggling, then this could be a sign of long-term problems. So we definitely want to make sure that that's analyzed there. That's a good point for us to kind of highlight and come back to. Our current ratio, the amount of current assets to current liabilities, Ford's doing a little better. You really want well over 2 on current ratio. So the fact that they're just barely over 1 is not great, but at least they have enough to cover their current liabilities if they needed to. Quick ratio, that is your current assets minus your inventory divided by your current liabilities. So that's also known as the acid test. It's just a liquidity ratio to determine, how much money do they really have on hand to meet their obligations. And Ford is also doing a little better there at 1.05. Both of their balance sheets really look very similar. There's some slight differences. Billions of dollars, but regardless, they really do reflect each other quite a bit. debt to equity is huge. It's twice as much for Ford than it is for GM. I just noticed that I've got Ford in the F column and GM in the G column on this spreadsheet, which I think is hilarious. It's a great coincidence for me. But the debt to equity, I really want to see a low number. I'd like less than 1 if we could get it. So the fact that we're in the hundreds and the 300s, not great for either company. Our annual dividend amount, you're going to get more out of Ford. If you're a dividend investor, dividend growth investor, that's something to consider here. You're going to get a bigger bang for your buck buying Ford than you are GM, twice as much for like half as much. Your dividend rate, the trailing one is 4.44. The future anticipated rate is 4.95 versus 0.79 and 1.09. Again, lower dividend yield. And so we could sit and calculate percentages on that as far as what the growth is. We could use the dividend discount model or Graham-Gross model to figure out how those dividends and the expectations factor into share price. I haven't done that yet. I could definitely, we'll probably go and sit down and do that and see what the price per share suggestion would be. Now, on our insider ownership, this is something not a lot of people look at, but I want to know how many people inside of the company actually own shares in the company. That's a red flag if nobody in the company wants to own the stock. As well, I would definitely want to go and look at the SEC filings, see is the CEO or COO or any of these people, are they selling off a bunch of their stock? That's usually a red flag. And I haven't done that yet personally. I just haven't had a lot of time to sit down and look through that. But insider ownership percentage is a good thing to look at in lieu of that when you're trying to make quick decisions. As far as the market share, this is where we're getting into more of the quantitative analysis beyond just looking at financial statements. I pulled this information out of the annual report. So, you can definitely go onto Edgar, which is the SEC.gov filing system, or again on Yahoo Finance, you can find those. Now, market share, and I don't know if you know this, so there at the bottom, you can see the top 5 competitors in the auto industry, where they're ranked. And of course, I put the percentage owned by China. I found that kind of interesting when I was searching through these companies, was to see how much of these companies are owned by China. So it's 50% for 3 of the top 5, 75% for BMW, and surprisingly only 5% right now for Tesla. I imagine that'll go up as they adopt more of that brand, but that's just speculation. So GM is the top ranked for market share. In the North American market, they've got 15.5 versus 12.5. It's even higher if you just look at the United States. I believe it's closer to 16% for GM and 13 for Ford. Now, Ford is the reigning champion as far as truck sales. The F-150, one of the best-selling trucks of all time. And then our international share, Ford surprisingly was only at 1.4% versus 7.6%. I was pretty stumped by that. Did not expect that to be the case. Now, as far as some interesting, noteworthy things that I found when I was looking through the financials or reading through the annual report, was Ford has twice the working capital than GM does. So, as they're trying to lean up and catch up to GM, they've got a lot of room to work with there. GM has less than $10 billion worth of debt, which pretty good spot to be in. So, a lot of those long-term liabilities then aren't necessarily debt obligations, but they are things to look out for. As far as noteworthy things in their business models, Ford really secured a huge win over the last couple months, getting that EV charging deal with Tesla. There's going to be compatibility in the Ford models with those Tesla superchargers, which is going to be a big deal. If I'm a consumer and I'm looking at which brand I want to buy, I want the one where I can charge it at the most places. Now, personally, I want a gas backup, So I'd want a hybrid, not a actual plug-in charging vehicle. But I live in a rural community. I drive around a lot, so EVs aren't really up my alley. But I know that's where a lot of the market's going, and so as someone who's looking at investing, I want to look at what the consumers want, and they want accessibility to infrastructure. So Ford's definitely secured a huge win with that. GM's taking a little different route. They're going for those higher end luxury EVs anyways. They dropped the Hummer or whatever recently, which was a pretty big deal. I know Ford's had some hiccups, like with their Ford Lightning, their pickup truck, having to pause orders and stuff like that. So we definitely want to see how that all pans out. The companies actually have different goals. I was surprised by this when I was reading through it. Ford's only going for 40% EV sales by the end of the decade. I think that might bode well for them. They're keeping it diversified. They're not putting all their eggs in one basket. But that could hurt them. If the market really shifts into EVs, they may not be poised to capture a big enough market share and catch up. Chevy, on the other hand, their goal is to be 100% EV by 2035. That's crazy to me. I would not have expected that, but more power to them. Again, if the market goes that way, it'll pay off to be less diversified. If it stays kind of split, Ford will come out ahead. Something else I didn't really know about, I hadn't heard anything, but also, again, I live in a rural community, so I wouldn't have caught this. But as far as autonomous vehicles, so AVs, both companies had subsidiary units in their companies built out for this. Chevy started it out. They invested way early before Ford did in this technology. It's known as Cruise. They just secured some big contracts, and they've already rolled out in San Francisco, but they're rolling out into Houston now, which is a huge market. And then as well, Ford disbanded their autonomous vehicle unit last year. So if that can pay off for Chevy, they're way ahead of the game. They've got the market share for it. And they've also, I believe California recently passed a bill that's going to allow them to collect fees for people riding around in those vehicles. They can actually make money off of it. That's why Ford disbanded it, is they didn't feel like they could get a return on those AVs. And so if Chevy can really make that work for them, and if there can be adoption and consumer sentiment to say, yeah, I feel like these are safe, then this is going to be a big deal for Chevy. And then again, I mentioned that Chevy was an early adopter, so they didn't just adopt EV and AV technology way ahead of the curve. They also adopted cost cutting, making their business lean, whereas Ford got rid of their AVs that they picked up late, and then also they're just now starting with a plan called Ford Plus. It's their restructuring program. It could be a big deal. Sometimes it's not necessarily when you start, but how it's executed. So Ford could definitely come out on top of that. So I know that's kind of been long-winded. It's a lot to listen to, but I think there's pros and cons to each one. Personally, I feel like on the quantitative side, Ford's definitely got some positives, but I think even quantitative, GM comes out on top, at least right now. Again, these are just snapshots in time, so this could all change by next quarter, by quarter 3, quarter 4, who knows? It could change this year, it could change next year. And then as well, I think on the qualitative side, GM as well comes out on top. They have really positioned themselves to continue to capture that market share, to continue to stay ahead of the curve when these new technologies come out. If they can continue to do that, then I think they're the solid winner here. If you disagree, if you agree, I want to hear about it in the comments. If I missed something, if I got it wrong, definitely let me know. I want feedback. I want to make sure that as I'm making these videos that, one, I'm telling the truth, but two, I make sense, that I don't have my foot in my mouth. And then while you're at it, if you're going to go ahead and, whether you're going to comment or not, definitely make sure you like and subscribe. That way you don't miss out on these. And like I said, I'm hoping to roll more of these out. I've got some more videos planned. I want to do Visa and MasterCard, Home Depot and Lowe's, Walmart and Target, um, Microsoft and Google and Amazon and all of these big companies. There's a lot more to be explored out there. So like I said, make sure you like, subscribe, comment your thoughts, and then don't miss out on these next comparisons. Stay tuned, and I hope to see you guys soon.